Recently, China sharply cut back on U.S. beef imports in 2025, allowing many import permits for American meat processing facilities to expire and refraining from renewing them. This has led U.S. beef shipments to China to fall to minimal levels, about $8.1 million in July and $9.5 million in August, down from over $118 million and $125 million in the same months a year earlier. In fact, the United States is relinquishing significant portions of that market to its rivals, particularly Australia, which has seen a notable increase in its beef exports to China as a result. Since President Donald Trump resumed his position in the White House, Australian beef has supplanted the U.S. supply in China, redirecting hundreds of millions of dollars that previously supported the U.S. cattle industry into Australian hands. Concurrently, American-style dining establishments in China are already making adjustments. In Beijing, numerous restaurants are transitioning from U.S. beef to Australian beef due to escalating tariff threats. The shift to Australian beef has become commonplace across various Chinese venues, especially considering that Australia's products either encounter fewer obstacles or enjoy more advantageous trade conditions. U.S. shipments to China, valued at approximately $120 million per month, plummeted after Beijing allowed permits for hundreds of American meat facilities to expire in March, coinciding with Trump's initiation of a retaliatory tariff conflict. Additionally, other U.S. agricultural exports to China, the largest food importer globally, have also faced challenges since Trump regained power in January of this year. Specifically, U.S. farmers have incurred losses amounting to billions of dollars in soybean shipments during the ongoing harvest season. In recent years, U.S. beef exports have experienced a decline due to drought conditions that have reduced the nation's cattle herd, leading to decreased production and driving prices to unprecedented levels. However, the decline in trade with China has been markedly more abrupt and severe. Australian beef shipments to China shot from $140 million a month in the 2 years to March to $221 million in July and $226 million in August. In total, over the 5 months from April through August, U.S. beef exports to China were worth $388 million less than if trade had remained at the average level of the previous 2 years. Australian shipments were worth $313 million more. On the other hand, Brazil, China's largest beef supplier, has also stepped up exports in recent months. Still, Australia has benefited most because its grain-fed beef is the closest equivalent to U.S. products. Joe Schul, U.S. Meat Export Federation spokesperson, said, "Trade negotiations between Beijing and Washington could end the lockout. The beef impasse with China has very little to do with beef. It's entangled in other issues between the U.S. and China. If they can make progress on those issues, we see more hope for getting this resolved." U.S. beef shipments to China surged in 2020 and 2021 after Trump, in his first term, struck a trade deal with Beijing. China plays a useful role for U.S. beef processors by paying premium prices for cuts like chuck rolls that are less popular in the United States. Schul said, "We still need to export the cuts that do not attract a lot of attention in the domestic market. We're losing out on the upward pressure of the Chinese bids." Matt Dalgleish, a meat and livestock analyst at Australian Consultants, said, "Even with a trade agreement, the U.S. would struggle to take back market share for several years. Australia's beef production has reached an all-time high, and its meat is far cheaper. Now Australia is not only shipping more to China but exporting record quantities to the United States. The U.S. isn't really in a position to be competitive," said Dalgleish. How will it affect U.S. beef producers, as China has rejected U.S. beef and imports from Australia? The recent move by China to restrict U.S. beef imports is likely to have significant repercussions for U.S. beef producers, affecting revenue, market access, competitiveness, and strategic positioning. Before the restrictions, China was a substantial buyer of U.S. beef, paying premium prices, especially for certain cuts that were less in demand domestically. But recent data show that U.S. beef exports to China have plunged dramatically. In July 2025, Chinese trade data recorded only $8.1 million in U.S. beef imports, and $9.5 million in August, compared with over $118 to $125 million in the same months a year prior. Many U.S. meat processing facilities have seen their export permits expire, and China has not renewed their eligibility, effectively shutting them out of the market. Such a precipitous drop means U.S. beef producers lose not only the volume of exports but also access to margins associated with international trade, particularly from high-end markets in China. That revenue doesn't simply vanish, it must be compensated elsewhere, or producers face lower profitability. With China pulling back, U.S. producers may have surplus beef that was destined for export. This can create oversupply in the domestic market, putting downward pressure on prices for certain cuts. Farmers and ranchers who had anticipated that export demand would absorb some of their production now face the risk of lower margins or excess stock. This pressure could force producers to reduce output, cut costs, or seek alternative markets, some of which may offer lower prices, further squeezing profitability. China's import volume is being filled by other suppliers, especially Australia, whose beef exports to China have surged. Because Australian beef doesn't currently face the same regulatory or tariff barriers in China, they are stepping into the gap left by the U.S. withdrawal. Once those trade relationships strengthen, it can be difficult for U.S. producers to reclaim market share. The rebuilding of trust, logistics, and supply chains often takes years, meaning that even if the U.S. and China restore normal trade, U.S. beef producers may not immediately recover their previous presence. To mitigate losses, U.S. producers may try to shift their exports to other countries, such as Southeast Asia, the Middle East, or Latin America. But because China was a large and premium-paying market, rerouting comes with logistical cost increases, longer shipping distances, and potentially lower margins. Moreover, competition is stiff in these alternative markets, and U.S. producers may need to invest in marketing, certification, or adaptation to local preferences, none of which are free. Agriculture, especially beef, is politically sensitive in many U.S. states. These export losses could become a tool of domestic political pressure, pushing government officials to seek tariff relief or diplomatic intervention. The trade disruption also signals to other countries that U.S. producers may be vulnerable to non-tariff barriers or permit denials, encouraging more cautious or diversified trade strategies. Finally, the restriction forms part of a broader pattern of non-tariff barriers and regulatory blocking being applied by China to U.S. agricultural exports, not just beef but also poultry, soy, and other farm goods. This signals that agricultural sectors will remain on the front lines of trade friction between the two powers. How is trade talk between China and the United States going on? Trade talks between the United States and China remain active but increasingly fraught, marked by a mixture of diplomatic engagement, regulatory escalation, and strategic positioning. The escalation is visible on multiple fronts. In recent weeks, China announced sweeping export controls on rare earths and associated technologies, which the U.S. regards as a strategic move given the crucial role of those materials in semiconductors, defense, and clean technologies. In response, the U.S. has threatened to impose 100% tariffs on Chinese imports effective November 1, along with new export restrictions on critical software. Despite renewed trade tensions, both sides continue to hold working-level talks. Thank you for tuning in, and I encourage you to subscribe to our channel for fresh content on crucial global matters. Additionally, please like the video and share your insights on the topic in the comments section below. Have a nice day.